Hello friends, welcome to a new session on income tax. In last few videos we have discussed the basic concepts of income tax and the concept of residential status. We have discussed how to determine the residential status of different assessee. Once you can determine the residential status of different assessee for different previous year, the next most important thing you should know is incidence of tax. When I say incidence of tax, it simply means what are the scope of total income of a particular assessee on the basis of your residential status. Let us see what actually this incidence of tax means. Incidence of tax means the scope of total income of an assessee depending upon or its residential status. Now, the incidence of tax depends on two things. One, that is residential status of the assessee. Incidence of tax has a direct relationship with residential status of an assessee. Number two thing is it again depends on the place and time of accrual or receipt of income. Place of receipt or accrual of income, time of accrual or time of receipt of income. On these two aspects, incidence of tax purely depends on, and it doesn't have any relationship with tax incidence. Has no relationship with your citizenship, gender, domicile, nationality of the assessee. Now you see it, as I have told you, that incidence of tax will give you a total scope of income to be taxable in the hands of the assessee or not. The incidence of tax depends on residential status and place and time of accrual, and all the provisions of this incidence of tax is coming under section 5 and indirectly coming under section 9 also. Let us see how to decide the incidence or how to decide the scope of a total income on the basis of your residential status. As you know, a particular assessee residential status may be resident, may be non-resident. In case of your individual or HUF, again the residential status may be your ordinary resident, not ordinary resident, non-resident. So whatever may be the residential status, for the purpose of incidence of tax, for the purpose of determining the tax scope, the income may be grouped under two categories, broad two categories. One is Indian income, another one is foreign income. Then to understand which income to be considered as Indian income and to which income to be considered as a foreign income, let us give, I have given here a table very briefly. There are two questions. You have to ask these two questions, that is whether the income is received or deemed to be received in India during the previous year, during the current previous year. First question you have to ask yourself as an assessee, whether the income you have received or deemed to be received in India, the income which is considered for taxation purpose is being received or deemed to be received in India during the current previous year. Second question is whether the income is accrues or income accrues or arises or deemed to be arises or accrued in India during the previous year. If both of the question answer is yes, then it is Indian income. If either one of the question answer is yes, then also it is Indian income. But if none of the question answer, if all the questions answer is no, then it is foreign income. Again I am repeating, if income is received, deemed to be received, income arised, deemed to be arised, either of the four, if any one of the four is yes, then it is Indian income. If all the four is no, then it is foreign income. Again I am telling in very simple language, if a particular income is received in India, it is Indian income. If income is deemed to be received in India, also Indian income. If an income is accrued in India, then also it is Indian income. If an income is deemed to be accrued in India, then also Indian income. Otherwise, it is a foreign income. Now, what for this Indian income and foreign incomes are required? Before that, let us understand that two different concept: income received, deemed to be received, accrued, deemed to be accrued in India. When I say income received in India, these are the following provisions which you should keep in your mind. You know that whenever a particular income is received in India, it is not so difficult to determine whether it is received in India or not. When it is deemed to be received in India, then we require little bit of analysis whether a particular income is deemed to be received in India. Now you will see, remittance of income is not receipt of income. When I say remittance of income, it's not a receipt of income. For example, suppose a person is earning salary in a foreign country, providing service there, and subsequently that income is remitted to India to his family member. In that case, that is not income of that person. It is simply the remittance of income earned outside India by that person. Number two is, the income may be received in cash or kind. When I say received in India, Indian income, that income may be in cash, may be in kind. Whenever there is a income in kind, it should be converted to equivalent, money equivalent for income tax point of view. Similarly, income actually received or deemed to be received also comes under the same category. Income received is Indian income deemed to be received is also Indian income. Let me give an example. Income deemed to be received in India. For example, a person who is an Indian person or Indian citizen who is working as a foreign ambassador in America and providing services there, but on behalf of government of India, and government of India is giving him salary, and that salary is again received in America, still then that will be considered as income deemed to be received in India, because he is being providing services on behalf of the government of India. Similarly, income is said to be received when it reaches the assessee. Income is said to be received when it reaches the assessee on first time, and subsequent time when it again comes to the assessee, it is not considered as income or received. On the other hand, when the right to receive the income becomes vested in the assessee, it is said to be accrued and accrues or arises in India. That means when a person may not have received that income but has right to receive the income, that will be considered as income arises or accrue. For example, a person has already served for the month of April but not yet received any salary. In that case, that salary income is said to be accrue or arises in the hands of that particular assessee. Next important concept is income deemed to accrue or arises in India. These are the following cases where the income is considered to be deemed to accrue or arises in India. Number one is any income which is received in business connection. Any income which is received in business connection. When I say business connection, business outside India or part activities of business carried out in India will be considered as a business activities. Any activities relating to business connection and money is being received or income is received from that business, then it will be considered as income deemed to accrue or arises in India. And that business may have also a permanent establishment or territorial nexus in that particular in India also. Then also it will be considered as income from business connection. But same thing has some exception, like if all the operations are not carried out in India, even if the income is received from business connection, the entire income will not be considered as deemed to accrue or arises in India. That part will be considered as Indian income. The operations of that part which is carried on in India. Second is any income arises because of the purchase, because of the business which engaged in purchase of goods and goods for export purpose. Then also any income by a non-resident, engaged in the business for purchase of goods for export purpose also is not coming under income accrue or dues arises in India. Similarly, any non-resident who is engaged in the business of collecting your news for outside the country supply also not coming under accrues or arises in India. Similarly, income derived from the non-resident for shooting of film in India by foreign citizen is also not coming under this category. Any income arises from any asset which is located in India. Any income arises by transfer of the assets which is located in India is also considered as deemed income or deemed to accrue arises in India. Similarly, the services rendered in India by any person and any income derived from that will be considered as income accrue or arises in India. Services rendered outside India by Indian citizen, employer is the government of India, then any income which is being paid by government of India to that person is also considered as income deemed to accrue or arises in India. However, as per section 10 subsection 7, any allowances or perquisite given to that employees by the government of India are exempted. Similarly, dividend paid by Indian companies also accrue arises in India, though it is exempted, but it is coming under income deemed to accrue and arises in India. Interest on loan which is purely used in India, then it is deemed to accrue and arise in India. Royalty from knowledge which is used in India. Fees from technical services where this technical agreement is implemented in India. From any income arriving from this VIN, VIII will also be considered as income deemed to accrue and arises in India. If interest, royalty or fees for technical service FTS is payable by government of India, then such income should be deemed to accrue or arises in India, whether it is in business connection or not. If it is paid by government of India, then it will be considered as your business, your deemed to accrue and arises in India. Now it is clear that which income is an Indian income, which income is a foreign income. On the basis of that Indian income and foreign income, now we can decide whether particular income will be taxable in the hands of the assessee depending upon different types of residential status. That means when I say taxable, it does not mean that whether it is taxable or exempted, whether it will come within the purview of the total income of the assessee during the previous year on the basis of its residential status. Let me give an example. Now you see this is how, depending upon the residential status of individual and HUF, whether Indian income and foreign income will be taxable or not, it has been decided. Now you see, if it is an Indian income, whatever may be the residential status, again I am repeating, in case of Indian income, whatever may be the residential status, ordinary resident, non-ordinary resident, non-resident, if it is Indian income, then it is always taxable in the hands of all the assessees. अगर ये इंडियन इनकम है तो कोई भी रेसिडेंशियल स्टेटस हो सकता है लेकिन टैक्सेबल होगा. नंबर 2, income means foreign income. When it is coming under foreign income, then resident will pay always, it is always taxable under the head resident, ordinarily resident. If he is an ordinarily resident, then foreign income is always taxable. If it is a non-resident, it is never taxable. If it is a non-resident, if the individual or HUF is non-resident, foreign income is not taxable at all, never taxable. And if not ordinarily resident and having foreign income, then also it is not taxable except 2 cases. Again I am repeating, in case of Indian income, it is taxable in the hands of all types of assessee, whether it is a resident, ordinary resident, not ordinary resident, non-resident. But in case of foreign income, it is only taxable in the hands of ordinary resident, and it is never taxable, it is not taxable in the hands of non-resident. What about that not ordinary resident? If not ordinary resident, it is also not taxable. However, in two cases it will be taxable. What are the two cases? Business income and profession income. Then any income received, any income which is received and due outside India, that means foreign income, in connection with the business, and is taxable if that business is controlled from India, partly or wholly. If that business is controlled from India, then even if it is a foreign income, it will be taxable in the hands of the not ordinary resident. Similarly, if the income is a professional income, it will be taxable if the profession is set up in India, completely set up in India. So, except these two cases, in all other cases, that foreign income is exempted, except that ordinarily resident. Ordinarily resident will pay tax whether it is Indian income or foreign income. Let us see a simple example so that we can understand the total concept of this incidence of tax. Mr. Pagal for the previous year 1920 reported the following incomes. Now, if his residential status is ordinary resident, not ordinary residents, and non-resident, then how much will be taxable or not? That we have to decide. Now, what are the incomes? Now, when I read out that income, let us determine whether it is a foreign income or Indian income. This much we have to decide. Then we know whether it is a taxable or not. Now, profits from business in Pune received in Singapore. Now, profits from business in Pune, so business is situated in Pune, so it is Indian income, 70,000. Income from house property in Australia received in India, again it is Indian income received in India. Income from business in Singapore controlled from India, again it is coming under Indian income. Then income from agriculture in Nepal. So, income from business in Singapore controlled from India means it is a foreign income, but it is controlled from India. And D is income from agriculture in Nepal received in India. Received in India means Indian income. Dividends received from a foreign company, it is a foreign income. Pension received abroad for services rendered in India, Indian income. Income dues accrues in India. Technical fees received outside India from a foreign company for technical services provided for a project in Hong Kong, foreign income. Past untaxed profit brought to India, that means remittance, it is not at all income for the previous year. Now, on that basis, you see the taxability solution. As we have already decided Indian income, foreign income, how many is foreign income, that is being given. So, those income which are Indian, it is taxable for all, whether it is ordinary resident, not ordinary resident, or non-resident. But for foreign income, you see in the third one, income from business in Singapore, it is a foreign income and it will be taxable in case of ordinary resident. It is not taxable in case of non-resident, but in case of not ordinary resident, also it is taxable because this business is being controlled from India. Similarly, again there is a foreign income, that is dividend from a foreign company. Foreign income, dividend income, it is not business and professional income, so it is only taxable in case of ordinary resident. No other will pay any tax. Similarly, pension 1,05,000. As we know, there is a pension will be taxable in the hands of under the head salary. So 50,000 standard deduction is applicable. Here it is written as 40,000. Actually, it is 50,000 standard deduction. So 55,000 will be taxable in case of ordinary resident, not ordinary resident, and non-resident. Similarly, your technical fees received, it is again foreign income. It is only taxable in case of ordinary resident. Past untaxed income, as I have told you, this is not income, it is a remittance, and it is not taxable at all. This is how, on the basis of the income and information, you have to first decide whether it is Indian income, foreign income. Then you can find out which income is taxable under the in the hands of the assessee depending upon its residential status. I have also given another example here for your practice, and there is also solution. You can go on through the questions and decide whether it is a foreign income and Indian income, and accordingly find out whether it is taxable or not. I have also given here the solution of that same questions, and now it is clear that whether particular income will be taxable in the hands of the assessee or not, it purely depends on two things. One is residential status of that assessee, and another one is incidence of tax. Once you decide the residential status, then you have to decide whether the income is an Indian income or foreign income. On that basis, you can decide the total income will be included that income or not. Thank you. Stay at home, stay safe.